I would like to ask Christos Pouris from European Investment Bank, who will be leading the panel on the first panel today, which will be about setting the stage, the big picture. And I would like to invite Tanya Ziegler from the Cambridge Center for Alternative Finance, Oliver Gaida from European Crowdfunding Network, and Dr. Georgina Gomez from Erasmus University in Rotterdam, who will be actually, each of them will be presenting a different aspect of the big picture.
It works. Good morning, everybody. I'm glad to be here with you today. I am Christos Pouris, and I work for the European Investment Bank. Luisa before gave a very good presentation of what we do as a bank. And actually, I work for the financial instruments area. I design, manage financial instruments, and financial instruments also have this alternative aspect. What we are trying to do is to use money in a smarter and more effective way. And also we are interested to develop markets, the microfinance market, the alternative finance market, so we provide capacity building to the institutions that are involved in these markets. And we are very keen to see these markets to grow even more. Before I present my panelists, I would like to ask you something. What is the biggest transportation company today in the world? Do you know? A guess? Uber. And Uber does not have even a single vehicle. So, what is a second question? What is the biggest company that provides hotel accommodation? Airbnb, my booking. And they don't have even a hotel or even a single room. So we live in a world that is changing, is transforming. The consumer behavior has changed. Today we would like to do everything by our smartphone, by using our smartphones. The way we communicate, the way that we take decisions, the way that we invest, that we borrow, that we lend money has changed. So we live in an age of changes, and alternative finance, it is on the front line. And here we have three panelists. We have Oliver from my left, Tanya and Georgina, that actually they are on the front line of this change, and they will give us very interesting information about this market, about the alternative market. I will start from Tanya, because Tanya she will present herself. She's a senior manager researcher at the Cambridge Institute of Alternative Finance. And they do almost every year a very interesting benchmarking report of the alternative finance market. And they are about to publish the new report for 2016. And because it's very important to have data of the market, to have good data, in order to be able to assess the market, Tanya is the right person to give us more information.
Thank you very much. I guess since... Oh, okay.
It's for those slides.
Oh, I don't have any slides, actually.
But for those who do, okay, will you?
But, if I had two hands, I'd be... Okay. So thank you very much for the introduction, and thank you so much for inviting the center to participate today. It's really critical for us to be able to talk about alternative finance and what's happening sort of at a, using evidence-based and unbiased research. So just by way of introduction, like Christos said, I work at the Center for Alternative Finance, and my area of focus is on the online alternative finance channels. So I'm not going to be talking about cryptocurrencies today. although we will be talking about that later on in the panel. I'm really focusing on those online alternative finance channels and instruments that are delivering funding to to various types of fundraisers, businesses, individuals, projects, so on and so forth. And that includes sort of peer-to-peer lending, equity crowdfunding, and some of the non-investment models, reward and donation-based crowdfunding as well. So I think that one way to start is actually, we should really think about what is the size of online alternative finance right now. Morgan Stanley estimated that by the year 2020, $290 billion would be created by alternative finance platforms and transacted to various fundraisers across the world. Well, our results from this year so far show that we're actually hitting that 290 mark today. In 2016, we estimate that actually about $290 billion were transacted through online alternative finance. So this is a growing space that deserves attention. I think that there's still a lot of ideas that this is a Wild West mentality. That's no longer the issue or the case. Before I talk about the EU, I just want to give you a bit of context around what we've seen globally. Most of this 290 figure is coming from China. About 245 billion of it, in fact, is coming from China. And the vast majority of that is from peer-to-peer consumer lending platforms. After that, you've got the United States at 35 billion, and then the United Kingdom at around 6 billion. We've not published that result yet, so if you don't mind, just keep some of these figures to yourselves. And then in Europe, we're actually in the middle right now of our research on that project. As of now, it looks like you're about 2 billion, just continental Europe, so excluding the United Kingdom. And we're still actually collecting data, so it's likely that it's going to be even more. So quick shout out to any platforms that haven't already submitted your survey. You know who you are and you need to submit. So as we can see, Europe is actually doing quite well. So it's not it's not as large as China, obviously, but actually last year, or in 2015, you went over that 1 billion mark, and now we're closer to 2 billion. One of the things, though, that's been very interesting about Europe is that although it's growing well, you have a sort of a two-digit rate at the moment, somewhere around 45 to 55%. We're not totally sure yet because we have not finished the results. You've seen a lot of consolidation in Europe this past year. You've seen a lot of platforms that are no longer in existence. You've seen a number of mergers. And you've seen a lot of platforms that, had previously started just online that are now moving to traditional models for a variety of reasons. And I think that Oliver will be able to speak to that more. But these are things to think about, how the formation of the industry has changed from, say 2013 and 2014, which was the peak of platform formation and new fintech startups. Well, now we're seeing that, of the somewhat 300 truly active platforms that we saw in 2015, about 220, 230 truly active platforms currently exist. So this is not to say that this is necessarily a bad thing. Consolidation is actually quite a good thing. It shows that the industry is maturing, but it's something to be cognizant of. With respect to the breakdown of, With respect to the breakdown of the models that we're seeing about 24% in Europe are from peer-to-peer consumer lending. About 40% is from peer-to-peer business lending. But the caveat to that is that a large proportion of that 40%, nearly half, is operating some sort of a balance sheet or balance sheet business lending alongside it, which is predominantly being funded by institutions. So this idea that, peer-to-peer lending, for example, is disruptive to banks is a little bit of a false statement, because actually what we're seeing is that a lot of banks and various institutions are partnering with platforms to actually do this, to actually become part of the fabric. So this is very complementary. I think that's an important thing to note, that there's still this mentality that, peer-to-peer lending is dangerous or bad, and that it's going to negatively affect our systems, and that's what you hear a lot from various banks. But actually, more and more banks are using peer-to-peer lending platforms because of their speed, because of the way that they do their credit analysis. So there's a lot of really cool, interesting things, and you'll be hearing actually later on today by some of the newer platforms that are doing really interesting things in credit rating and credit scoring. And I think that that's probably the next really true frontier for alternative finance. I'll just say two more things very quickly so that we can move on to the next panel, to the next speaker. So the UK obviously is the largest in the EU. Now, if we exclude the UK, we're at that 2 billion mark, more or less. After that, we've got Germany, France, Finland, the Netherlands, and Spain at the moment that are your leaders. So these are sort of the key markets to be looking at. One of the interesting trends that we've noted so far is that auto bid or auto selection, not just on the lending side, but also in some of the other models, is becoming a bigger trend. About 42%, in fact, of investors utilize some sort of an automated system when making their decisions about how they want to lend or fund a project or entity. And like I mentioned, about 40 to 45% of platforms or platform funding, or the funding rather that's going to fundraisers, is coming from some sort of an institution. So with that, I think this is giving you kind of an overview of what the space looks like. With that, I will kick it to Oliver.
Okay, thank you very much, Tanya. It was very interesting to hear that this market has grown even more, and at the same time has consolidated. That means that it comes closer to maturity. And another proof of this is that there is already in Brussels the European crowdfunding network that has members of the crowdfunding institutions. So the institutions, they try to create a more institutional profile. They would like to be represented. Oliver is heading this organization, and he's trying to bring good practices in this sector, to advocate the cases of this sector to the European institutions and to other international financial institutions, and also to bring policy to fill the policy gap that exists in this sector, the regulation gap. But regulation sometimes is good if it is, and sometimes is bad. If it is too much or too little, can create more problems from the solutions that can give. Oliver, what do you believe? Do we need do we need regulation in this market? It is too soon, it is too late. Where we stand for the moment?
Thank you, Christos, and thank you very much for inviting us here to speak. Thank you, Tanya, for your introduction and the markets. So you asked about regulation. Do we need it? Is it too early? Is it too late? First of all, there always has been regulation, and the market always has been regulated. Just the regulation that has been in place was not designed for crowdfunding or peer-to-peer lending, however you want to call it. It was designed for existing financial models, often non-digital. So it wasn't adequate. That hasn't really changed. We today have 11 or 12 countries, member states in the EU that have bespoke regulation with regard to crowdfunding activities, so lending and securities. But these are not aligned, so they're all very different. And then in the other member states, we have interpretation of the national regulators with regard to existing EU frameworks, and they all differ as well. So we have a regulatory framework, but it doesn't necessarily align from country to country, and it's extremely difficult for platforms to maybe scale within one country and then move across. I think we see that a little bit in the figures that Tanya presented. Don't get me wrong, it was like 230 billion of alternative finance in China and 2 billion in Europe. So there are probably cultural hurdles that keep us from growing this market, but also regulatory issues. And of course, there is an established financial sector here. Yeah? There is banks, there's microfinance institutions, there's other actors that serve this market. When we look at the platforms and what we are trying to do is our goal was to educate policymakers because regulation can enable, but in most cases disables markets from growing. So we wanted education so that when we come to the discussion of regulation, we have policymakers that understand the issues. On member state level, that hasn't worked out. Many member states have just pressed ahead with regulation. The exceptions are the Brits that maybe did a step-by-step approach, revised their aspect, how they deal with the market, and have fairly strict regulation of alternative finance today, but it is manageable, and the industry was able to cope with the regulation as it grew. In other markets, like in Italy, there was regulation put on the market before there was really a market, and it has basically destroyed any opportunity to grow. So the market in Italy is very small today. We see other markets like Germany, even though it's one of the bigger markets, where the regulation that affects alternative finance actually has nothing to do with alternative finance. It comes out of a public bankruptcy of a direct lending company that was financing renewable energy projects. And it was a reaction from policymakers against the potential risk of harming retail investors. And this new regulation then got a carve out for crowdfunding activities, which focuses on one specific type of crowdfunding or financial structures, which again are not really scalable and provide a lot of complex issues for the market. So we are in ongoing discussions with Brussels, who looks at figures, of course, because they need to assess the market. And we have seen some goodwill on the security side. We have a prospectus law that will become law within the next 1.5 years across Europe, where the threshold when you issue a prospectus by offering a public security will be raised from 100,000 to 1 million euros. So that certainly clears up the way for security type crowdfunding below 1 million euros without large regulatory cost. And the other threshold has been moved to 8 million from 5 million. Again, there is the interpretation room for the national member states, but this already will allow in smaller markets equity-based crowdfunding to really take off and finance SMEs. As long as these platforms, and Tanya mentioned that already, can, of course, have a sustainable business model. So we still work on this as well. On the lending side, we haven't seen this yet, but the European Commission has made, for all of you who follow up their announcements, with a midterm review of the Capital Market Union and also following some of our work, the announcement that towards the end of this year, they will announce how they will harmonize the cross-border transactions for SME finance, specifically also for fintech. So we should expect some form of announcement by the end of this year, maybe early next year, and actual follow-up in potentially even regulations or directives that will allow better cross-border transactions in the alternative finance sector. So this is where we are, and I think this is actually a good speed, because the market, we've seen that needs to mature, needs to ripen. When you say 300-something platforms or 200 platforms, if you really look at the market, you often see 3 or 4 platforms per country where you say, they probably make it, or they already have made it, but a lot of platforms where you don't know if they will make it. And so in that sense, since microfinance, or since crowdfunding is not like microfinance, we don't get subsidies or grants or co-financing from local institutions yet. This is really a private business that tries to make a business model out of a very, very difficult market. And I think we will, in the long term, see even more reduction of numbers of platforms and more established platforms operating in different markets with their specific model. So we will see a smaller number, maybe even only 100 platforms across Europe, maybe even less. Tanya also mentioned one aspect where we see platforms scale back their digital operations. That is basically a result often of regulation where the moment you offer on a digital platform financial transaction, it becomes a public offering or you market investment opportunities, and that is subject to regulation. So a lot of platforms take these offline and work with networks of investors outside of the public. And so they are still, in my view, alternative finance providers. We also have a lot of venture-driven lending funds that are alternative finance providers, but they are not digital, they are not online. So this is a model where they just see we can cut out regulatory issues and focus on a slightly different market, but that has more liquidity and that can finance the transactions that we want to finance, rather than the crowd, the retail investors that we have to market again to, and we don't know how often they want to invest. So this is from let's say maybe a slightly qualitative view from my end on how the market is developing. Again, every platform operates differently, and I think we have a few very interesting panels and actors that also can show how they deal with these issues, how technology can help them, and how new business lines help them to generate revenue and to become a sustainable business.
Great. The much work is sustainability. The market has to reach a size, an operational size that will allow to at least some of the institutions to become sustainable and continue to do business. Oliver, who drives this market? The investors or the customers or the borrowers? What do you believe?
Today, I think it's difficult to say. The origins of crowdfunding here in Europe with financial instruments were actually the peer-to-peer lending side, which called themselves crowdfunding in those days as well, as a direct result of the banking crisis in 2008. So the first lending platforms in the UK, like Zopa or RateSetter, were set up around that time. And if you would go back in time and you find old documents of them, it's really the argument that we have to replace the banks, they're not serving our interests, and we have to cut out the middlemen. We've heard already that today they become financial institutions just like banks, and they cooperate with the banks. So this initial, I'd say, social drive that the industry even had on the financial side is being removed by the need for professionalism. And we see more and more actors moving in there as well. But otherwise, it has been basically a blue ocean market, yeah. There was a need for providing finance. There was no real, solution for this. And people potentially looking also at Kiva and similar things that come out of the microfinance world set up these platforms and created the market. Today, I think it's still on if you look at SME finance, the need for startups, but also smaller businesses to access finance still remains complex when you go to the bank, or sometimes impossible. And for larger transactions, so medium-sized businesses, is the speed. So the demand is there. Yeah, it is either the speed of the transaction, no matter that it might be more expensive, or it's the lack of alternatives or the complex way to access alternatives. For the investor side, it's in an environment of low interest rates, a possibility to maybe play with some money and make some profits. In most cases, that may not happen. Certainly on the security side, it's a long way to make a security investment and then see an exit with a positive returns. But on the lending side, this is possible, even though they're not outrageously high, the returns, but you can make more money there as an investor than you do on your bank account. So I think it's still these both sides come together as a lack of adequate solutions for those that seek funding, and there is certainly no real alternative for those that want to invest money other than other high-risk options like cryptocurrency, day trading, and so on. And I think then crowdfunding offers more stability and more security. And in that sense, where Tanya came in with the institutions that are now aligning with platforms. Yeah, we see pension funds allocating $500 million and more to specific platforms in order to do SME lending. If I, as a consumer, then can co-invest, that gives me some form of security, because I believe that this institution wouldn't finance these transactions if they would not be convinced of the professional approach of the platforms. So I think this is where it comes together as well, and where we see alignment of interest actually now, across different sectors.
Great. And it is only about profit, but also social impact, social return. And in this question, maybe we can get an answer from Georgina Gomez, who is a professor at the Erasmus University. And in order to achieve this social impact, we have to use only the internet alternative, let's say, finance institutions, or there are also more traditional ways. Maybe in countries that the technology is real advanced, the internet is the easy solution, but also there are other cases. And what happened in periods of crisis? Maybe you can tell us a little bit about the alternative currencies and what they can bring, what solutions can bring today or in periods of crisis.
Okay, thanks, Christos. Thanks for inviting me to this event. Good morning, everybody. Now, I feel flattered because I've heard the word traditional next to the word complementary currencies. And you are absolutely right. Nothing is older than creating currencies. We have a few thousand years of experience as a human race that we create currencies to document that we owe, we have debts and credits with each other. So actually, first, we were born as human beings, we were born with debts, we had to pay taxes, we had to pay contributions to temples, etc. And money came out as originally as the document that was proving that this existed, and that later circulated. So I put it in a very simple way. This is what money is, originally what money was. So if it was created by somebody at some point, it can be created again at any other point. And this is what we call complementary currency systems. Who has ever heard of this? Anyone? One? Oops. Two. Okay. So I think my idea was a lot less traditional than I thought. Now, let's go back to this question, who can create money? And I said, well, yeah, the ones we know, the government, of course, the European Central Bank creates euros, and other central bank creates dollars, etc., etc. And there's also banks. Banks, by lending money, they create more money, they multiply. But what I am interested in is the third sector, the grassroots, the agreements, the very face-to-face agreements between people saying, well, we need something that will allow us to trade. And I've just given you the second hint, or the second secret about complementary currency systems, is that we need to separate the various functions of money. So we need to conceive the possibility that unit of account, reserve of value, medium of exchange, and means of payment will not be performed by the same thing, the same money thing. And if we accept these two premises, we can recreate currency to document our exchanges and our debts, and that we can have different money things to have different things, to do different things. Then we can also accept that third sector organizations and face-to-face groups anywhere in the world can also create currency. And this is actually happening. There are over 3,000 groups around the world that have their own currencies. I'm sure you've heard of the cryptocurrencies. I would argue that they are alternative, but that they have very little social in their DNA. And why do we link this to the local economy? Because, well, regions are like this bucket with holes. Each time we buy something from outside our province, our region, we are actually leaving income go away. So one of the ideas of these complementary currencies is to somehow prevent this income to flow out, to flow away from our regions. So we use this metaphor of filling in the holes in this bucket. So the first issue is, why would we use them? Well, the answer would be to keep more income within our local economy. Well, this presentation was changed a little bit. Anyway, when does this work? When we can create this circular economy, this circle of transactions. If we don't have this, these complementary currencies don't work. If we are 2, 3, 4, 5 people, we will not be able to have sufficient exchanges and sufficient transactions and sufficient diversity of goods and services or enough debts and credits with each other. It will basically fall apart rather quickly. So I said there are these 3,000 groups around the world. Yes, but there must be another few thousand that pop up and die every year. So I only refer to the ones that survive, and in the ones that survive, we see this pattern in which we find sufficient people and sufficient diversity to keep this circle going on. This particular graphic I got from what is these days the largest group, which is in Kenya, in Mombasa, and they have around 3,000 micro-entrepreneurs in one of the largest slums in the world, in which everybody has some sort of enterprise in their home. So there's people selling water, drinking water, or people grabbing firewood, etc., and they sell it with this alternative currency, not Kenyan shillings, their own money. So why are they there? Why do they exist? What's the point? Christos has already said the first thing. They appear in the crisis. Actually, I come from Argentina, and I can witness that 6 million people. I have witnessed that 6 million people survived the worst crisis of ever in the country, thanks to this alternative means of payment. In this case, now, if it was 6 million or 5 million, there are no reliable data. I'm not going to argue that point. It doesn't make any sense. The point is that what allowed people to survive in a crisis that chopped off 25% of the GDP within 3 years, 25% of the GDP, I repeat this number, it's because there was something else that allowed them to keep going. It allowed their economies to keep going. So, why do we need complementary currencies? Why do we want complementary currencies? Like I said, to protect the local economy or to pursue local economic development, to promote businesses, specifically B2B networks, like we will have a presentation about this in the afternoon, to protect the environment. We can reward people that have an environmentally friendly behavior. A very successful case of this existed in Rotterdam, and Rabobank lent the platform that allowed for this. The fourth point would be to promote social exchange, to give things to each other. So I do your laundry if you take care of my kids, and somebody else can do gardening for you, and we create, again, this circle of exchanges. And then we have, yes, of course, the discourse of anti-capitalism and getting off the system and getting away from banks and so on and so on. And this is the last slide. And these are some of the examples of the notes made by grassroots organizations. I have a collection of hundreds of these. And people actually did exchange their stuff with these pieces of colored paper. Why? Because there was sufficient trust, because there was need, because there was a very deep crisis, and this kept their economies going by. I love the one of the cat. Somebody had a cat and put in the banknote they made the picture of their cat, Mischievous. It doesn't matter what they used to exchange as long as they kept on exchanging. They kept on their businesses and their economies going.
Great, thank you very much, Georgina. I like also this one with the cat, maybe because cats have many lives, and people, they took a decision for themselves, and they said, okay, we will survive. We will not leave the crisis to take us what we have already. And I think it's about, like teamwork. If you are in the middle of Sahara and you are a tribe, you don't need money to survive. You need the help of the other members of the tribe in order to survive. So you have to help each other. And it is important. It is important to not only to do things for profit, but also to do things that help the society to keep going, and things that they have positive impact for all the members of the society and not profit only for few of them. It is, when I was in the university, I had a professor that used to say that the nature hates the empty space. Wherever there is an empty space, it comes something later, sooner or later, something that will fill the gap. And this is what happened with the banking crisis. When we had these credit crunch and the banks withdrew from the consumer lending and the SME lending, we had the alternative finance institutions with the use of the technology and the different methods to come and fill this huge gap. But it's only about financing. There are other things that the alternative finance brings in this world. There is added value other than the financing for the society, for the people, for the economy.
I want to add perhaps one point, is that almost a little bit less than half of the world's population doesn't use banks. And they don't always have access to cash, to money. So the means of payments that they use are sometimes basically, I will pay you. Yeah, I will pay you. At some point. And somehow, of course there is default, but somehow, most of the time, this works. And we have to admit that if almost half of the population lives in this way, well, it clearly has to be working. And one of the simple ways of, this has nothing to do with profit, it's just we need these instruments to go by. So I think that when we talk about alternative finance, we cannot forget that there is this almost half of the population of the world that is living on things that has no contact with banks. They live in areas where banks don't exist. So alternative is their normal, traditional life.
And to also add to that, when we talk about crowdfunding, crowdfunding nowadays it's a term, it's not quite clear anymore. So we have donations. So obviously there's an intrinsic, return. You want to help, you give money, and whatever you get back is within you. You have the reward-based, or it's basically a commercial contract where you give money for a product or service, and often you give way more money than the value that you get returned. And so there is, of course, the idea that the people that provide money want something to succeed and want to give money into a cause or into a development of something. Might be cultural, may not be. And then when on the financial side, when it is about financing startups, it is about financing ideas, and most investors are fully aware that they, in all likelihood, will not get their money back in full. So they also want to drive new ideas, innovation, even research and development. We have dedicated crowdfunding platforms for medtech, so medical technology that otherwise doesn't get funded. The investors fully know that there's a high risk attached to this. So there is a very strong social component in there, in these security transactions. Maybe not in all of them, but in many. And then when you go to crowd lending, so peer-to-peer, in many platforms you have automated allocations where you don't know where the money goes, so it's no social function. It is really about making a return. We see an extremely high growth in property finance. There's no social aspect there. This is not social housing that's being built. Yeah, this is luxury apartments. This is about the money. And we also see a growth in renewable energy projects. And that, again, has a social aspect. People finance projects that they believe will make the world a better life. And when we talk about cryptocurrencies very, very quickly, we have this new phenomenon of ICOs, so initial coin offerings, which are at first sight extremely scary. But if you look into this, the vast amount of these ICOs are not financial transactions. They are where you participate in by paying money into a new currency, and you get returned a currency, and that is done by like-minded people that come out of a social network which works usually within the same industry. And then later, when this project is successful, this currency is being used to trade services on this platform. So as a potential example, it could be in the creative space and in the filmmaking space. You could have, filming crews, you could have actors, you can have script writers, and they would buy this currency. And when this project is being financed and fully functional, they will own cryptocurrency and then use the cryptocurrency to buy a script writer, to pay for actors, to receive money from someone else. And if they need this to be turned into cash, they would take it out of the system and transfer it on an exchange into cash. But usually the people that participate in this will use it just like in Argentina, as we agree on this currency amongst ourselves. And that is being used already behind the scenes in many industries where you have a lot of supply chains and a lot of transactions to cut out the banking fees and to work amongst each other. So I think this is a quite interesting aspect.
I just want to add one thing as well, just around what gaps are we filling? And I'll just use the UK as an example because although the report's not published, these results will be in the report that's coming out within the next month. In terms of banking, peer-to-peer business lending in the United Kingdom accounts for almost 6% of new SME loans. So that's quite significant. And then when you think about just the S's and the micro businesses, actually peer-to-peer business lending is accounting for almost 15% against banking, loans through a bank to S's of the SME space. So that's who's being served, and that's quite considerable. With respect to the equity side, we looked at new VC and startup funding. Equity crowdfunding in the United Kingdom, I'm only talking about the UK right now, is about 17%. So these are important numbers. Where, I can't remember if it was Engel or he said that once a market starts hitting about 20%, they're no longer new, they're established. So this is something to consider. And then finally, with respect to equity, the non-investment models, the donation and reward, 1% of the businesses, or about 1% of the funding that went to UK businesses came from reward or donation. 1% doesn't sound like much. But actually, in terms of, when we think of them in terms of the number of businesses that use donation or rewards, it actually is about 8 to 10%. So they're not maybe, raising thousands and thousands or tens of thousands of pounds, but these are businesses that are using donation and reward for raising funding, and that's actually significant numbers. About 8% of the businesses that we saw were using this, even though it was only 1% of the total volume. So, and when I kind of look at who is this affecting, it's not necessarily that these are businesses that would not be banked or would not raise money, but by and large, the businesses that are getting this money were underbanked or underserved. And as we see with the VC market, for example, where it's 17% is sort of co-investment, this is becoming a more significant avenue, not just for the fundraisers, but also for our traditional funders.
Maybe interesting is that 2 weeks ago, the European Central Banks made a statement that they consider peer-to-peer lending, and probably more talking about the UK lending market, to be reaching a point where they have systemic risk, and so they asked the policymakers to consider this and maybe look at regulating this market. That also shows you it's not really new and alternative. So there is something that is really growing fast and that may have an impact on the whole financial services industry.
Great. And in this market, there are different types of institutions. Where you believe that we are going? Tanya said before that the market shows some signs of consolidation, but what happened in this market? You have institutions that try to compete to each other. They work all together for the benefit of the market. It's something that do have new players in this market. What's your feeling and what the data shows?
So in Europe, we had a handful of new players in 2016, and they're they're not necessarily driving the volume. And so I would say with consolidation, this is not a bad thing. The kinds of, there's this idea, I was actually at the Central Bank of Spain on Tuesday, and we were talking about, what will happen, and one of the statements that was made by a commercial bank there was that, well, we'll just buy one of these guys eventually if we feel that that's what we want to do. And to be fair, you are sort of already seeing that kind of thing happen. You do have banks that have invested heavily into peer-to-peer business lending platforms. But you also see a peer-to-peer business lending platform becoming a bank in the United Kingdom. So, the same way that we're thinking, the banks or the traditional guys are going to come in and buy you out, it actually can go the other way as well. We have a lot of these sort of chartered banks in the UK, and now we have a peer-to-peer lending platform that has applied for a banking license. The other side of it, too, is that, yes, banks and traditional finance providers may come into the space. We have examples of Goldman Sachs has created Marcus, which, rather than buying a platform like Lending Club, they became a platform like Lending Club by creating Marcus. But what I'm actually more interested in are not the traditional finance providers that are entering the space, but rather your e-commerce or your social networks. I mean, RenRen has significant shares in SoFi. RenRen is the Chinese Facebook. So these are probably the people, actually, when traditional finance players say that, oh, we have to be scared of the alternative finance players, actually the ones that are going to eat your pie are the people that have that data. Anyone who is actually that's really the true currency. The currency is in who has the data and who is using data in a smart way. So we have this open banking initiative in the United Kingdom right now with the idea that this would allow for sort of your non-traditional lenders to access banking level data. But what's been interesting is that when you really take, you kind of pop the hood on some of these platforms, they're already doing a lot of what the banks would have been doing or are doing when they're doing their assessments. What makes them more interesting is when they start tinkering in additional data sets. And so if you are a Facebook or an Amazon and you have information about your vendors, not just when they're going to get paid, but when when is their high season of selling. Now all of a sudden I know when they're going to have cash flow gaps. When they're, so you have a new relationship with how you can provide finance. And we'll be hearing later from a very interesting platform that's based in the United Kingdom that's really done interesting things in data. So that, I think, is really the next and the frontier. And that's what banks and other guys should really be worried about.
Just to add to this, so this is the microfinance industry knows this as upscaling and downscaling. The market is interesting for banks when they have scaled. If there's a platform that is big enough to make numerous transactions in a quite safe way on an ongoing basis, where the bank says, well, this is becoming interesting for our retail business, they will look at this. We've seen in France the French Post Bank acquiring a big lending platform. One of the oldest platforms started out as a reward platform, opened up lending platforms. They were bought by the bank. A hedge fund acquired another lending platform. So we've seen downscaling from institutional investors, and hedge funds are alternative finance. 15 years ago, they were the freaks. We have had forums like this talking about hedge funds. They're new. Now they are established. They're buying platforms. In Germany, if you're a lending platform, you by definition have to have a banking license. You're a bank. You don't do the banking business with deposits and so on, but you need a banking license. So if you're operating a platform there, are you really alternative? Yeah. The cooperation with the bank is already there because they will borrow a license from somebody. So we have had this since day one in some markets, and we've seen that institutions are very interested in this market. They often don't see it as sizable enough to really enter it and make an effort. And a lot of the activities you've seen by banks in the market, you can put on the CSR level. That's like marketing, social responsibility. We kind of support the innovative guys here. The moment this will scale up, I think this becomes interesting. And the point with the social networks, it's not only data, it's also access to clients. And if you look very carefully, many of them already do tiny little bits of banking products. Payments, for example, you can use Skype to do micropayments. Yeah? This is not a bank, this is not the typical organization you would think about. And if these channels that have millions and billions of users start applying the same technologies, then that is really interesting. I think that is the real challenge. So I think right now our market is not a challenge to the financial industry. It shows where there can be innovation, and I expect that large financial institutions will assimilate some of that information into their traditional operations, so cut down on retail activities and replace that with digital, deal origination. Many banks do it already through platforms. For the securities market, venture capital funds co-invest on platforms, work with platforms. It's a way of diversifying your portfolio. There's certain negative sides as well, but they look at this and they will deal with this. And there's venture capital funds that run crowdfunding platforms. So there is also some kind of merging. Business angels are fully involved in them. Not all of them, but many. And I believe for the microfinance industry, there is also certain aspects that are very interesting. And this is a question because microfinance is maybe not a cash-rich industry, just like the crowdfunding industry isn't. It's how this will come together. But if you look at platforms like Kiva, Babyloan, Lenderhand, that is already going in that way as well, where crowdfunding provides finance to microfinance institutions. So I think there can be more cooperation.
I'd just like to put into perspective these numbers, because whenever you look at users at the bottom of the pyramid, you always see these very small aggregate numbers. The volume is always very, very small. For instance, I said 6 million people used alternative currencies in Argentina during the crisis. Well, these 6 million people, in terms of the GDP, was 0.7. So if you look at volume for the whole economy, micro anything is always going to be very small. But if you look at the perspective of each one of these households, it means it's the difference between life and death. Yeah, so this pattern of, well, it's 1%, let's not forget that this is thousands and thousands of people. If you see how some of the subsidies per child in Latin America, they are $50, $60 per month per child, and you say this is nothing. And they brought in this public into banks because these subsidies are distributed by banks. And of course, in aggregate terms, it's a lot of work for the banks, and in terms of business, it's peanuts, because this is a few million people exchanging peanuts, each one of them. But like I said, if you look at the social phase of this, these micro payments and micro banking and microcredit, it means eating or not eating for many families around the world. And I'd like to finish with just a small hint that thanks God for crowdfunding, because Mozart actually financed his operas with this. He was banned from anywhere else. We wouldn't have operas by Mozart if it wasn't for crowdfunding.
Or the Statue of Liberty.
Yeah, exactly.
Great.
Maybe just to follow on, because this is basically what microfinance started out to do as well. It was, there was always finance. Yeah, you didn't need microfinance institutions. It was replacing the loan sharks with regulated institutions that can operate professionally and operate an orderly business. If you look at crowdfunding, there's a really interesting study by AFME, that's the Association of Financial Markets, so Goldman Sachs, JP Morgan, but together with the Boston Consulting Group, and they looked at the equity market, so financing of SMEs in Europe. And so we have the markets like the venture capital market and the business angel market, and we have the stock exchanges and crowdfunding. But if you look at venture capital, early stage finance, first rounds, it's about 6 billion a year, and a similar amount for business angels. The IPO market is very limited. There's maybe 30, 40, 50 billion that is being invested every year. And they made estimates based on statistics from the European Commission as to family, friends, and fool business. And we all know that businesses are financed by their parents, by their brothers. And based on these statistics, the family, friends, and fool amount is bigger than all the other amounts together. And that is basically the loan sharks. This is the fully unregulated business that happens but nobody captures it, nobody regulates it, nobody wants to deal with it, because it's so many little amounts and things you can't really put into money. And I think this is what crowdfunding initially and still to a certain degree can capture and basically formalize, yeah, if it is done within the right framework. And this is, I think, a very nice similarity between the microfinance sector as well, which did the same, just mostly in the developing world first.
The Wonga example is, it's funny you should say that, because I had a conversation with somebody who is part of the banking initiative, the Open Bank initiative in the UK, and one of the comments that they made was just that everyone likes to, pardon my French, but shit on Wonga, but actually, it brought into the light a lot of activities that were happening by loan sharks. So, so we have to think about those kind of contexts as well when we think about the impact of alternative finance.
Great. Very interesting discussion and very interesting things we have heard from our panelists. Now, maybe we have some time to take questions from the audience. I don't know if you have any questions that you would like to make.
Thank you. I'm Kaiser Nassim from the IFC, just as an intro. More of some comments, actually. Well, firstly, thank you very much. I think this was a very enlightening panel discussion on alternate finance. But it was alternate finance, but we've dwelled mostly on lending. So I was just wondering, because the figures are then tremendous if you put in payments, like 2 trillion, not the 250 billion. And I think that's a large part of what microfinance SMEs is about, the payment system, and that's where it started. So I was just wondering why we didn't talk about that. On your, Georgina, alternate currency, interesting concept. In these 2,000 years of history that you said, I think last 100 years, so this is a concept which was called barter. So if I understood it correctly, so it's something like that. But how would this work if you were trading globally in a globalized economy? Because, that circle is quite internal. And also on cryptocurrencies, I mean, cryptocurrencies, the concept the way I understand it, is a little different than being an alternate currency. It's more to do with the distributed ledger and the fact that it's quicker. And besides being quicker, it can be recorded properly. So is that exactly alternate, or is it just it is alternate, it's another way of payment, but the reason for that is different than what you were saying. There's a host of other questions, but just for the sake of time.
Okay, how does this work at a global level? That's a very simple answer. It doesn't. You cannot globalize something that relies on face-to-face contact, because like I said, if I don't know you, I don't do your laundry for nothing. Yeah? However, there are ways around it. For example, something called time banks. I do the laundry, you do something for somebody else that is equivalent to 1 hour of labor, and somebody does something for someone else equivalent to 1 hour of labor. So we can find ways around it. This is not bartering, because barter is direct. It's from, between two persons. However, to answer your question, does this work at a global level? No, no way. You need this social cohesion or trust, whatever you want to call it, and this works at the local level. If local government intervenes, of course, this adds a gist of legitimacy, because local government, in one way or another, guarantees the whole scheme. And this is a variation on the concept. Are the cryptocurrencies alternative? Well, they do have a discourse of getting rid of the banks. And they do have an anti-system, words in what they preach, at least. Why are we paying the banks to do a computer operation that I can do myself in a computer? So they do have this discourse, and in this sense, you can say they are alternative. However, I said they have no social value. They don't create community. They don't have this face-to-face trust between people. You trust the computer.
Great.
I guess I'd probably just address, that you're right. Payment systems are definitely one of the most critical elements to alternative finance, and it's not something that we touched upon today. We did touch upon it today, but we didn't, talk about it in all of its complexities. I think that there's a panel later on, actually, that will be talking about distributive ledger technology and Bitcoin and how that's all working out. I would just say, though, that there are a number of platforms that are worth looking at with respect to cross-border payments and how that impacts some of the diaspora finance that we're seeing from Europe back into Africa and from the United States back into Latin America. And some of the prime movers are, people like Telefonica or Movistar, and so that is definitely an area that I think we should look at more. Our center is looking at payment systems. We look at everything from guys like TransferWise and some of the platforms that just that marry effectively the peer-to-peer stroke money transferring from a business in, say, the United Kingdom that needs to make a payment in China and how that's working out. And so if you give me your card later, I can give you some of the information that we've done on that. And I think that it's perhaps a topic in future conferences that we should maybe delve further into, because payment systems certainly are critical and a critical part of the peer-to-peer lending conversation as well.
And with PSD2, the payment market will be liberalized and there will be a lot of innovation. And if you have the same conference in 2 years, that's, I think, where you see lots of things happening.
Okay, great. We don't have time to take another question. I would like to thank my panelists. I see a lot of excitement, and I think there's a reason for that. We are in the market that grows, and it has a lot of potential. And it has potential because it covers the real needs of people. And it came to stay. And I think in the next conference, we will have even more good news to say. Thank you very much again. It was a great discussion. Thank you.